A very good day to all of you guys. Welcome to the mock exam 6 answer discussion session. So as always, we are going to go into detail and discuss the multiple choice paper of the Econ-Hub mock exam series, the 6th mock exam. And then at the end, once we have completed the MCQ paper discussion, I will give you guys a bit of a roundup of and highlight a few key areas or questions from the structured paper or the Econ 2 paper, right? So without further delay, let's jump into the MCQ paper and start the discussion. Right. Hopefully by now on the screen, you guys can see the MCQ paper. Yes. Can I get a quick thumbs up or a yes if you can see? Right. You can see the paper. Right. Great. So with that, let's start off then. So question 1, the opportunity cost of studying full-time at a private business academy is likely to include all of the following except one. Which of them is not included, or which of them is not a opportunity cost of studying in a private university? In other words, because someone would take up a full-time studentship in a private academy, but are they unable to do something? They are giving up, foregoing. So I think out of the answers given, you guys will agree with me. The fourth answer, the fourth option, the money spent on mobile phone reloads during the studentship period. Whether this particular individual studies at a private university or not, they will spend money on mobile phone reloads. So they are not spending money on mobile phone reloads and not being able to spend that money on anything else because they are studying in the university or the business academy. Is that clear? But if all the other four options, if they didn't study in the business academy, they wouldn't have to incur that cost or buy those goods and services. So correct answer is number 4. Okay. As always, if there is any other option that I am giving, which you have chosen, but if I've given a different option as the correct answer, please do clarify. Question number 2. Which of the following is not a function of an entrepreneur within a market economy? What is not a function of an entrepreneur? Basically, business organizations within a market economy are given two fundamental or out of the three basic economic problems in a market economic system, a business organization will directly get involved in solving two of the three basic economic problems. That is the problems of what to produce and the problem of what to produce and how to produce. But a business organization, in turn an entrepreneur, does not get directly involved in the process of solving the third base economic problem, that is whom to produce, or the income distribution problem. So the correct answer should be number 4, which is not a function of an entrepreneur. Okay. Question number 3. Identify the statement you cannot agree with based on your knowledge of basic economic concepts. So it goes statement by statement. So these statements might cover a wide range of things, right? That are connected to basic economic concepts. Identify the statement you cannot agree with. Okay, so that is what we're looking for. The opportunity cost of the economic resource entrepreneurship is normal profits. That is correct. So it cannot be a statement we cannot agree with. All economic resources are production resources, while all production resources may not be considered as economic resources. True, because there are free or non-economic resources. Forest, fisheries, and water resources are generally considered to be renewable in nature. True, they are renewable in nature, so it can't be our answer. Net capital formulation represents creating new additions to the economy's existing capital stock. That is also correct. So that can't be our answer. Hopefully, the fifth one is incorrect and therefore our answer. The behavior of opportunity cost when moving from one alternative product combination to another along a linear production possibility curve is highly realistic and practical. No, it is highly unrealistic and impractical because in the real world, resources are non-homogeneous, they are job specific, and even the production methodologies do not match. So therefore, this is our correct answer, number 5. Question 4. USA was one of the major advanced economies that was adversely affected by the recent pandemic, including pandemic-induced economic downturn, which dampened consumer expenditure and business confidence. An immediate impact of this on the US economy would have been an immediate impact of this would be so the options are given or the answers are given based on the production possibility frontier. So basically, we are looking at a recession that has caused, or the pandemic that has caused an economic recession. So what is the immediate outcome of this pandemic-induced recession? So correct answer would be number 4. A movement to a point further inwards of the production possibility frontier. So when we say further inwards, we are arguing that in a very practical way, most countries are not operating on their PPF, and with the pandemic, they would basically move further inwards. Okay, so out of the answers given, the ideal answer, the best answer would be number 4. Now, what about number 3? A movement from a point inside the PPC to the boundary. That would be the correct answer, or at least towards the boundary would be the correct answer if there is a recovery, if there is a economic recovery. Right. Question 5. And also don't get recovery and economic boom also mixed up. In the economic recovery, so the entire period is what we call the expansion, which is divided into two parts. One is the initial stage of the expansion is the recovery, and the latter stage of the expansion is the boom. Economic boom, if we are to show using a production possibility frontier, it will be a point temporarily moving from the PPF to a point outside the PPF shown with the arrow. Right. Number 5. When the price mechanism is used to allocate resources, market price, what is the function that is performed by market price? As we know, price mechanism, relative price, or simply price is expected to perform 3 fundamental functions, namely the signaling function or information function, the incentive function, and the rationing function. So what gives one of the functions that price is expected to perform is answer number 5. Signal to producers the most profitable goods to produce. So the other 4 answers, 1 to 4, are not directly functions of price as a mechanism or price mechanism as a method of resource allocation. Again, if you guys have anything to clarify there, if you have picked a different option and if you want a clarification on why it is incorrect, then let me know. Question 6. Identify the most correct combination of movements among points in the following diagram, which corresponds to the situation or concept given. So there is 2 production possibility frontiers. The thicker or the full line would be basically the production possibility frontier. We can assume the economy is operating at present, and the dotted line, discontinuing production possibility line or frontier, would be one that the economy potentially could be at as well. Right. So zero opportunity cost. When would there be zero opportunity cost? A correct answer would ideally be either when we go from B to C or B to A. The most appropriate would be B to A, where both output of both clothing and food will increase. B to A, right? Even B to C could be correct. So if you look at the options given, B to C is not given as option, but B to A is given in two of them, which means 1, then 3, and then 4 we can eliminate. Okay, so it's either number 2 or number 5, B to A. Productive efficiency, right? Productive efficiency is indicated basically by any point on the PPC, but since the question is asking for a movement, then it can be a movement either from C to A or A to C. C to A or A to C. So let's look at the second option. B to C, no, that's incorrect. Then the second option is eliminated, which means we end up with the fifth option, A to C. Okay? Right, that's question 6. Question 7. The market demand function for mangoes is QD equals 300 minus 6P, and the market supply function is QS equals 20 plus 8P. If the price of mangoes is set at rupees 15, it is set at rupees 15, the mango market will experience. So if you look at the options given, it talks about market clearing of mangoes, which means the market is at equilibrium. It talks about excess demand, excess supply. Right. So I think one of the workings we have to do here is to find out at the price of 15, what is the situation in the mango market? Is it at equilibrium or is it having excess demand or excess supply? So at the price of 15, you guys can estimate the quantity demanded using the demand equation 300 minus 6P. So that's 300 minus 6 into 15 rupees. So that will give us 210. Yes. Then QS equals 20 plus 8P. So 20 plus 8 into 15. 8 into 15. So that will give us 140. So clearly demand exceeds that of supply. So in terms of a value, which we might not need because the answers are not expecting a value, we can stop the workings here. But just since we have done this up to this point, we have an excess demand of about 70. Now, excess demand is created at any price below equilibrium. So, if you want to solve an excess demand, we expect if the market is to come to equilibrium, whatever the price in the market to increase, not the equilibrium price, but whatever the price in the market to increase up to equilibrium. Therefore, excess demand and price, yes, answer number 2 would be correct. Answer number 2 would be correct. Got it? Right. So, question 8. The diagram below represents the market for consumer good in equilibrium. Yes, but it has a very distinct demand and supply curve. Demand curve seems to show the inelastic stretch of the demand curve, and the supply curve is clearly elastic. Clearly elastic because it's intersecting the price axis on the positive side and eventually will intersect the quantity axis, which is not marked, on the negative side. Okay? Right. The government decision to provide a unit production subsidy of this good will benefit. Okay? Subsidy benefit. Subsidy will increase supply. So if we have a supply curve, something of this nature, right? S plus R after the subsidy. So it's an increase in supply. You will have an equilibrium price, something of this nature, right? And equilibrium quantity, something of, equilibrium quantity, something of this nature. Okay, something like this. And if we start at the new equilibrium and go vertically up, okay, if we start at the new equilibrium and go vertically up somewhere there, we will have a very small area to show as the producer benefit. So the small red color area I'm struggling to even highlight is the producer benefit, but the bigger area, which I will highlight using the purple color bigger area, trapezium, would be the consumer benefit. Our logic is that's where the equilibrium price or the market price decreases. So consumer benefit would be much greater than the producer benefit. Yes. So what is the correct answer then? Correct answer would be number 4. Now, simply by identifying the elasticities also you can answer, because we have learned greater the elasticity, lower the subsidy benefit. Supply is more elastic, demand is inelastic, so suppliers will enjoy less of a benefit. That's another way to get to the answer. Correct answer number 4. Which of the which is the correct statement with regards to a firm operating within a monopolistic competition market in comparison to that of a firm in a perfectly competitive market. Monopolistic competition in comparison to perfect competition, because these are based on the characteristics of the market structures. I'll directly take you guys to the correct option and then we'll discuss if necessary further. Third one, the ability to increase sales by decreasing the price of their own product, because a monopolistic competition firm is able to act as a price maker. Because they have differentiated product, they can set their own price. But when it comes to the other features, monopolistic competition firm also faces the same characteristics or market dimensions as a perfectly competitive firm. Okay. So correct answer number 3. Any other option you guys want me to explain? Please do let me know. Question 10. So in this paper, as you guys can see, I've not stuck to one unit in that particular order, but I'm mixing and matching so that I'm trying to see if you can quickly go from one area of knowledge to another and apply them in these questions. Okay? The government imposes a sales tax to reduce consumption of a certain good. Which combination of price elasticity of demand and price elasticity of supply will have the greatest effect on the reduction of consumption? Greatest effect. If you want, we have learned this. I've given you guys a special note when we did these areas in theory as well as in revision. Unit 3, indirect government market intervention. That note included 2 main headings. One is the purpose and the effectiveness. Depending on the purpose, what kind of market should we enforce taxes, and also it included the cost of taxation also. Right. So now this is change consumer behavior is the objective, no? Changing consumer behavior. Then consumers have to respond, producers have to respond. That means demand and supply has to be elastic. Answer number 1. Okay. If the government wants to earn a revenue, simply the government's objective is just to earn a revenue from that indirect tax, then the demand and supply has to be inelastic. Demand and supply has to be inelastic. So question 10, answer 1. Questions 11 and 12 are based on diagram A and diagram B. So clearly diagram A is a tax, diagram B is a subsidy. Question 11, change in producer surplus due to government market intervention. Change in producer surplus is what I'm asking for. So after tax, producer surplus will decrease by the area of C and F. Decrease by the area of C and F, because after tax producer surplus will be only D. So after tax producer surplus is C and F. So let's see how many answers say C and F. There are three answers that have C and F, but only two of them show it as a decrease, a negative. So we can eliminate the first answer, third answer, and even the fourth answer because it's giving us a positive. So we narrowed it down to 2 or 5. Then after producer surplus, sorry, after producer surplus change, after a subsidy would be basically producer surplus will increase by the areas of B and E. Producer surplus will increase by the areas of B and E. So it's a positive value. C and F negative, B and E positive. Answer number 5. Answer number 5. Question 12. What is the deadweight loss caused by the government intervention? Same thing I could have asked by the allocative inefficiency. Okay. Deadweight loss after taxes E and F. After subsidies F. E and F, F. E and F, F. That is answer number 5. Right. 13. Which of the following is not a cost item relevant to the economic long run of production? Not relevant to the long run, then it has to be a fixed cost item. Normal profits. Normal profits is a fixed cost. It's not relevant to long run. Okay. Question 14. The following diagram represents the behavior of average total cost when increasing employment of all production factors. That's important because that gives us the idea that we are in the right. That gives us the idea we are in the long run. All production factors we are in the long run. Okay, we are in the long run, including capital and labor. Right. So when the firm increases output from Q1 to Q to Q1, the diagram ideally indicates, or the diagram is indicating the firm is experiencing what? Diminishing returns to scale, benefits through increased. Remember, what is given here is a financial thing. It's a cost curve, ATC. Actually, it's LR ATC because it says all inputs are changing. So diminishing returns to scale can explain output behavior. It's a real concept. It doesn't effectively explain cost increase. So we are looking for diseconomies of scale, which is answer number 3. Diminishing returns is short run. So this is not correct because it explains a real outcome, input, percentage of all input change compared with the percentage of all output change, percentage of output change. Here this is relevant for the short run. Okay. Benefits through increased levels of specialization explains increasing returns to scale, which will not explain increase in cost. Increase in economies of scale will explain decrease in cost. We are looking at an increase in cost because the cost curve in this range is upward sloping. Right. Correct answer number 3. Question 15. A perfectly competitive market, perfectly competitive firm is maximizing profits. When do they maximize profit? Ideal answer for profit maximization or the production equilibrium is generally MR equals MC. But we always need to remember two things. One, MR is equaling MC when MC is increasing, upward sloping. That is the first thing. Secondly, in perfect competition, the MR equals MC. Only in perfect competition, the MR equals MC condition, we have a unique way of writing it because in perfectly competitive markets, MR is the same as AR and price. We can say equilibrium condition, a profit maximizing condition only for a perfectly competitive firm is instead of MR, we can say price equals MC, or we can say AR equals MC. Both of these are correct. Right. So the correct response here would be MC equals price or price equals MC. That is touched here. That's okay. And is above when this happens above the minimum ABC, or when this happens above the minimum AFC, and it goes on like that. So ideally, this part above the minimum ABC is to indicate, because if we have a ABC curve like this, the MC curve definitely above this part is becoming the supply curve. The MC curve is becoming the supply curve of the firm, and it's upward sloping. That means MC is increasing. So it's ideal way to give the condition. MC equals price when price is above minimum ABC. Question 15, answer 1. The table below shows selected macroeconomic data for a hypothetical economy. You are given savings, investments, taxation, exports, public consumption, and imports. Public consumption and imports. What is public consumption? That's another way to give the G component. So this is S, I, T, X, and M. Basically, what I see is you're given a bunch of injections and withdrawals. And if you look at the answers also, they're talking about we have to eliminate it situation by situation. There's a situation of government dis-savings. Government dis-savings is when the budget balance is negative. In unit 6, that's how we take it. So that means T minus G, is it negative? T is 40, G is 20. No, it's a surplus. So this is wrong. The economy is in equilibrium. Then W has to equal J. Can you quickly tell me what are the what is the sigma W value? What are the components of W? Withdrawal, we have S, total withdrawal, we have T, and we have M. So give me the total of these values. That's 50 plus 40 plus 30. That will be 120. Yes, 120. Injections, give me the value. That will be investment, that will be government purchases, that will be exports. So that will be 30, 50, and 20, that will be 100 exactly. So this economy clearly not in equilibrium. This economy is not in equilibrium, right? Because W doesn't equal J. And actually we can find the answer here. Withdrawals are greater than injections. So if withdrawals are greater than injections, withdrawals have a contractionary impact on the circular flow. Injections have an expansionary impact. That means we are going in for a contraction, right? So correct answer should be number 4. Yes, current account deficit X minus M. That is the only thing we can do here. That is also surplus. Yeah. So this is eliminated. The economic circular flow will contract, not expand. Answer number 4. Okay, answer number 4. Is there a question you guys have asked? Let's see. No, you're going to answer. Good. Answer number 4. Question 16. 17. The diagram shows aggregate consumption function in a given economy. Okay. So what happens to marginal propensity to save and the aggregate average propensity to save, MPS and APS, if the consumption curve shifted from C to C1 while disposable income is held constant at the same level of disposable income, right? At the same level of disposable income, right? At C and at this point, right? And at this point, so I'll call them A and B. The question is, what will happen? They are going from C to C1. So consumption is clearly increasing. Consumption is increasing. When consumption increases, okay, it's upwards shift. No, that is an increase in consumption. Because consumption is on the vertical axis. So if consumption increases, now it's a proportionate shift or an asymmetric shift. That means the slope of the consumption curve is changing. And if consumption is increasing, marginal propensity to consume is increasing. In turn, what that will mean is, if marginal propensity to consume increases, marginal propensity to save, marginal propensity to consume increases, marginal propensity to save will decrease. Why? Because MPS is 1 minus MPC. So when the relationship between MPC and MPS is indirect. When MPC increases, MPS decreases. So we are looking for an answer that gives us MPS decreasing. Okay, MPS has to decrease because consumption function is proportionately or asymmetrically shifting upwards, increasing marginal propensity to consume, average propensity to consume. Right? How do we talk about, sorry, average propensity to save? How do we talk about average propensity to save? What will happen? Now, the marginal propensity and the average propensity of consumption both will increase with the curve shifting because the total consumption is also increasing. Total consumption is also increasing. Got it? So, now average propensity to consume APC is consumption divided by disposable income. Disposable income remains the same. We'll say Y1. Get it? But the consumption, absolute consumption value increases. That means APC is also increasing. Again, relationship between APC and APS is negative. APC increases, APS decreases. Correct answer number 2. Any questions? Anything you want to clarify? Please ask. Correct answer number 2. Question 17. Assume that in each simple economy, okay, the autonomous investment level is, assume that in a simple economy, we'll say autonomous investment, that is basically I, level is 100 million and autonomous expenditure multiplier is 2.5, okay. Also, the average propensity to consume in this economy tends to equal marginal propensity to consume. That means they don't have autonomous consumption. When A is 0, we have learned these things, okay, basic concepts. If A is 0, no autonomous consumption, none, we argue that average propensity to consume equals marginal propensity to consume, average propensity to save equals marginal propensity to save. The question is, identify the appropriate consumption function relevant for this economy. Appropriate consumption function relevant for this economy. Right. So the consumption function relevant for this economy would be basically number 4. Then you might be thinking, how did we get 0.6? How we got 0.6 is based on the multiplier calculation, right? So K equals delta, okay, autonomous investment is 100, no? Average propensity to, yeah, K equals delta 100 and the autonomous expenditure multiplier is 2.5. Sorry. Autonomous expenditure multiplier is 2.5. Then the estimation formula would be 1 divided by, we usually write it as 1 minus MPC. So if I, just to make it simple, if I write it as 1 divided by MPS and this is 2.5, I'm trying to avoid a complication, 2.5. So for this to be 2.5, then that means marginal propensity to consume, right? Marginal propensity to consume, okay? So it's 2.5 MPS equals 1, 2.5. So MPS would equal 1 divided by 2.5 would be, you guys tell me. I'll wait.
0.6. 0.6.
Is it 0.6? Or 0.4? The answer would be 0.6. Here it would be 0.4. Marginal propensity. Yes, Harnebada? Yeah? So then we want to find MPC because we are asked for the consumption function, no? The B component. So that would be 1 minus MPS. So 1 minus 0.4, we get 0.6. Okay, now if I take 1 minus MPC and we can do this, but I took it as 1 minus MPS because this way the chances of any errors is limited, and we can, the formula is not complicated also. Right, so because A is 0 that we figured out, then the only component we look for is MPC, that is 0.6. So the consumption function is C equals 0.6. Okay, C equals 0.6. Question 19. The diagram below illustrates the free market demand and supply curve for a merit good. Free market demand and supply curve for a merit good. Okay. At the free market equilibrium point E, okay, in the diagram, there is a misallocation of resources because consumption of the good creates a positive externality. Consumption of the good creates a positive externality. In order to improve the allocation of resources, what should we do? Right. Basically, consumption externality ne? So benefits approach. Social benefit equals private benefit plus external benefit. So now since there is an external benefit, again positive externality, you guys hopefully will come to the conclusion that the social benefit is greater than the private benefit. Social benefit is greater than the private benefit. If the social benefit is greater than the private benefit, that means the social benefit demand curve is above the private benefit demand curve. මේ තියෙන්නේ private benefit demand curve. So we draw a social benefit demand curve here. Get it? Okay. Social benefit demand curve here. Consumption of the good creates a positive externality. What can we do to improve the allocation? Right? So, yeah. So then, so this is the demand curve that shows the social benefit. It's higher than the private benefit. Hurry. So basically, we want to improve the resource allocation. That means we have to find a way to produce this quantity from Q to QS quantity, socially optimum quantity, and we can charge a bit of a higher price, that is here, up to PS. Okay, so we have to find a way to produce quantity of QS. What can we do to produce a quantity of QS? There are two options. One, now we have to find a way to produce the quantity of QS. So you have to find a way to bring the supply curve. You have to find a way to, I'll use the green color marker. You have to find a way to bring a supply curve. Okay, bring a supply curve somewhere here. Get it? We have to find a way to shift the supply here so that we are at this point and we produce the quantity of QS. So what do you think is the answer that will help? We can get consumers to buy more by reducing price, but the thing is, or by trying to encourage the demand for the product, right? But the thing is, we had to produce the product in the first place, no? So the existing quantity of the good should be supplied at a higher price. Existing quantity doesn't bring us to QS, socially optimum. More of the good should be supplied at a lower price. Yeah, now the thing is this. If demanders are at the moment willing to buy quantity of QS, they will only buy it at a lower price. The price would be somewhere here. Okay? Price would be somewhere here. They will be willing to buy at, I'll call it P1. At this price, they are willing to buy QS quantity. So we have to get the supply to bring the supply to that level, increase the supply, then we can sell at the price of P1. Answer 2 sounds correct to me. The demand curve should shift to the left, doesn't happen, doesn't work. The elasticity of demand should be increased. Elasticity of demand, no. that doesn't help as well, right? It's not about the consumers not willing to buy more, right? It's about the product not being produced sufficiently, resources not being allocated sufficiently. Unit tax will be more harmful. It will discourage consumption further. Correct answer number 2. Correct answer number 2. Okay? You can actually look at it from the cost side or the benefit side and get to the answer. Okay? Right. Question. If there's anything, please do ask. Question 20. If a given economy's real GNI at market price is lower than the nominal GDP at market price, and if the economy has adopted the output approach, they have adopted the output approach, okay? Nominal is lower than the, real is lower than the nominal, okay? Which of the following, right? Now, there are two things here. One, we are talking about real versus nominal. Then the price change is considered. And we are talking about GNI versus GDP. Again, NPI ROW is also relevant. Is that clear? Real to nominal, the difference is the price change. Obviously, the price change is more than the quantity change. Price change is more than the quantity change. Why did I say that? Because nominal is higher than the real. So any answer that talks about a greater price change. So this is out. 2, 3 are okay. 4 is out. 5 is okay. Right. Then GNI to GNI to GDP, the difference is NPI. NPI, now GNI is a lower value, GDP is a greater value. Again, NPI has to be negative. NPI has to be negative. This is not relevant. NPI has to be negative. This is NPI positive. Correct answer number 3. Correct answer number 3. Think about it. It's a good question. But you have to just be clear on what you're looking for and read the question carefully. Okay? 21. Identify the correct combination of features with regards to the National Consumer Price Index. Right? National Consumer Price Index. NCPI. NCPI. I think I've given the correct answer as 4. Am I right? Can you guys just check? Base year 2021. Items I remember 485. Yeah, should be number 4. Yes, right. Should be number 4. Good. Okay, just basic features you have to know. 22. Which of the following monetary policy measures can be effectively used to curtail a high rate of inflation? So, in inflation, what is the monetary policy approach? Overall direction should be contractionary or expansionary? Contractionary. We have to contract the money supply and increase the interest rate so that we can get a control of aggregate demand, and through that maybe curtail demand pull inflation. Yes. So the answer that is according to that monetary policy response would be, so number 1 is a direct control, that is not something connected with the monetary policy. Number 2 is fiscal policy. Number 3 is fiscal policy. Number 4, reducing bank interest rates will increase the money supply and aggregate demand further. Number 5, central banks selling securities in the open market, thereby absorbing some liquidity. Yes. 23. When applied to a public good, non-excludability could mean that. When we apply to a public good, what is non-excludability? The correct answer would be number 4. If the good is provided for one, it must be provided for everyone. You can't stop, you can't control, because you can't charge a price. There is no mechanism to do that. Practically, it's not possible. Get it? Non-rival, non-excludable. Right. Okay, non-rival means marginal cost is 0. Non-excludable means a price cannot be charged and there are free riders. When you give it to one person, everyone gets it. 24. With regards to a given economy, assume the following information is presented: exports, imports, taxes, government purchases, savings. Okay. What is the level of investment if the economy is in equilibrium? If the economy is in equilibrium, then you can argue based on what is given. You are given exports, you are given imports, you are given taxes, you are given government purchases, you are given savings. You can use the W equals J approach. So basically, W would be all the withdrawals are there, Anupata. Savings is there, tax is there, imports is there. So what is the total of withdrawals? J would be I plus G, that's it, and X. Right. So, sorry, what is the total of withdrawals? You guys gave me an answer. Total of withdrawals is 2,400. Yes? Right. Very good. 2,400 on this side. On this side, we are looking for I plus G is how much? 1,400. And we are looking for X of, sorry, X is 300. X is 300. So 1,700 here. Right? I plus 1,700, 2,400. So simply a crossover will help. Yes? 2,400 minus 1,700 equals I. Okay? So simple calculation there for you. So 700, right? So yeah, equals I. Correct answer number 2. Correct answer number 2. Okay? Question 24, answer number 2. Right. Then all of the following are causes of market failure in the form of inefficiency in resource allocation, except which one? Which is not a market failure, or which is not a reason for market failure, especially in resource allocation terms. Consumer sovereignty. Having consumer sovereignty doesn't lead to market failure. Producer sovereignty would lead to market failure, centralization of power. Okay, monopoly markets. 26. Which of the following indicates a contractionary fiscal policy? Contractionary fiscal policy. So we have to talk about taxes and government purchases. I think the first answer itself does the job. An increase in tax rates and decrease in government spending. Contractionary fiscal policy. 27. In a given year, it was found that real GDP in a certain economy had decreased, but the monetary aggregates and velocity of money circulation had both remained unchanged. Okay, which of the following must have occurred during this year? So, ideal approach is the quantity equation or the exchange equation. MV equals PY. So, what they're saying is real GNI in a certain economy had decreased, but the monetary aggregates and the velocity haven't changed. So, M and V, this both are constant. P is what we are asking for. Y has decreased. If Y has decreased, real output or quantity of output has decreased, but the left hand side of the equation mark hasn't changed. The only way we can justify this is by the same proportion, prices should have increased. The increase in price and the increase in P and decrease in Y should balance off. That is why the left hand side of the formula hasn't changed. Is that clear? So correct answer would be increase in price levels. Ideal answer would be increase in price level by the same proportion. Proportionate increase in price levels, but what we have is increase in price levels. Okay. Quantity equation can be used to get the answer. 27, answer number 2. Which of the following is not a consequence in a country with high rate of inflation? Not a consequence of high rate of inflation. What is not a consequence of high inflation? Answer number 4. Now, someone could argue, sir, isn't if aggregate is when aggregate demand is very high or excess aggregate demand, doesn't it create inflation? Yes. So this is a cause. You are asked for effects. Get it? Right. Answer number 4. 29. Interest rate will be an effective instrument of monetary policy if interest rate will be effective if the monetary policy variables, demand and supply for money, is sensitive or responsive for the interest rate changes. If they are not sensitive or responsive, you can increase, decrease interest rates, you might not see any real impact. So the correct answer should be number 2. Demand for bank loans or anything to do with interest has to be responsive, elastic. Should be responsive, should be elastic. Okay. 30. Assume a given product is domestically produced and also imported. Okay. Domestic market price is 4,000. The price cost of imported raw materials is 2,000. The domestic market price of imported good is also 4,000. Tariff on imported final good is 10%. Tariff on imported raw material is 15%. So you ask for the ERP into levels. One is only on the final product and then the complete tariff including the raw material. Right. So if we calculate ERP only for the final product, the first option, we are importing at 2,400, right? Correct? Sorry, we are importing at 2,000. 10% on 2,000. So 10% on 2,000 is, first doing tax adjustment. So we have 2,000 into 0.10. So that's basically 400. Okay. So whatever we imported at yes, whatever we imported at 4,000, now we'll be at 4,400. Okay, 4,400. So remember ERP is V1 minus V divided by V into 100, right? So what is V1? V1 is there is a 10% tariff on the final good. That is, no, sorry, this should be, I thought I wrote 4,000. 4,000 into 10%, 400. Hurry. Okay. Imported final good was 4,000. Now there's a 10% tariff. Yes? So 4,400. Are we clear on how we got the 4,400? It was 4,000. Then on that, there's a 10% tariff, which is 400. 4,400. Then the intermediate consumption or the raw materials is worth here. It's given 2,000. So 2,000. Therefore, we get 2,400. Right. 2,400 is V1. What is V? Before the tariff, it was 4,000. Raw materials were 2,000. And we get 2,000. Get it? So this calculation would be 2,400 minus 2,000 divided by 2,000 into 100. Okay? So that's basically 400 divided by 2000 into 100. That will be 20%. Am I right? Yes? Calculate and check. Is it 20%? Yes or no? Are you guys with me?
Yes, sir.
Yeah. Okay. 20%. Confirmed? Right. Okay. Then we are looking for 20% in the first column. So this is out, this is out, this is out. Right. Next, after the full tariff structure is implemented, then Buddha only V1 has to change. V doesn't change, no? So now V1 calculation would be, you have to calculate 2000, how much? 5%, right? So 0.05 on the 2000 you have to calculate. Is that clear? The raw material is also on the tariff, no? That will be 100, right? Yes, that will be 100. So now the V1 calculation would be 4,400 minus 2,100. 4,400 is because there is a 10% tariff. 4,000 became 4,400. Tariff was 400. 2,000 became 2,100 because there's a 5% tariff. Tariff is 100, 2,100. So that will give us basically 2,300 as the V1 value. So V2, right. So V1 minus V divided by V into 100, value added into 100 would be 2,300 minus 2,000 divided by 2000 into 100. When you solve this, that is 300 divided by 2000 into 100 should be 15%. Yes? 15%. So correct answer is number 2. Number 2. Okay? If you calculate it stage by stage, it becomes easy. Okay? Right. 31. Which of the following is a credit item on the current account of Sri Lanka's BOP? What is a credit item on the current account of Sri Lanka's BOP? Again, it has to be an inflow. No? I think number 3. Yes, that's a bit straightforward. I think you guys will agree. Overseas earnings of MAS Holdings, a large-scale garment apparel manufacturer from US during the year. Okay. Some of these are not in the current account. No? For example, item number 5. Yes, it goes to the financial account. Okay. Question? So can we just add 10 and 5% for question 30? Can we just add 10 and 5% for question 30? I'm not exactly clear on what you're asking. That is, once you calculate the value addition, can you add 10% and 5%, is it? Or instead of taking 0.010, 0.05 in that sense? Okay, just give me a bit more clarification, but I'll answer. Full tariff structure. Okay. What you're asking is, can you come in total adjust for 15%? Is it? Yeah. You can mathematically you will get the same outcome, but then you have to adjust it for the you have to calculate the value addition and then adjust the value addition only by 15%. Otherwise, 10% on 4,000 and 5% is on the 2,000. So then if you take 15% on the total, that might give you a different outcome. You get what I'm saying? Right. 31. Which of the following is, yeah, we did that. 32. The output of rice and sugar resulting from a given quantity of factor inputs, yeah, output values are given. Okay. So based on what is asked, it's about low opportunity cost, lower production cost, efficiency, comparative advantage. Yeah, I think we will need to do a quick opportunity cost calculation. Am I right? Because based on absolute advantage, can we come to a conclusion? Sugar, country X is 6, country Y is 3. Yeah, the same country has the absolute advantage for both products, sugar and rice. Okay, did you guys calculate the opportunity cost values? Can you tell me the opportunity cost values? Sugar, country X, what is the opportunity cost in terms of rice? So that will be 18 divided by 6, again 3 units of rice. Got it? Uh, then rice country X, that will be 6 divided by 18, I think 0.33 again of sugar. Then sugar country Y, that is 9 divided by 3, that is again 3, and here 0.33. So basically if you take sugar, the opportunity cost between the two countries X and Y are the same in terms of rice. If you take rice, it's the same. So that means we not only do not have a basis for mutually beneficial international trade on absolute advantage, we don't have a basis on comparative advantage as well. So therefore, we are going to go with answer number 3. Neither country can be gain benefits because absolute advantage, if we don't have a basis, we still can proceed. But we need to have a comparative advantage basis. Clear? Answer number 3. Okay, answer number 3. Yeah. 33. Devaluation of a currency, a country's currency, would necessarily result in a fall in. If there's a devaluation, definitely terms of trade will fall because terms of trade is based on the price and price is in terms of the exchange rate. Get it? So terms of trade will fall. Exchange rate and terms of trade are not the same concepts, but they have that direct relationship. Because with the devaluation, export prices, right? With the devaluation, change in export price index would be a reduction. That's why we do the devaluation because our exports will become cheaper. And the import price index will be a increase. This will lead to the terms of trade to decrease. This is what happens. Okay? A regional trading bloc which encourages free trade among member countries while has a common external tariff on import from non-member countries. ඒ කියන්නේ customs union. Where? Number 4. What union? Customs union. Common tariff policy, customs union. One stage of economic integration, you guys might remember. What is the status of gross reserves of Sri Lanka for the period of 2022 and 2023? Yeah, 22 and 23. Okay. So what is the answer given, Buddha? I assume the first one? No? Can't be the first one, no? I assume the third one. Yeah. Answer number 3. Yeah. I just assumed the third one because that is the lowest value in 2022. Get it? Right. We are in the process of building our official gross official reserves. Even the workshop we looked at a table for this. 36, which is not a main objective of International Monetary Fund. Not a main objective. I've been asking these questions from you guys continuously. Number 3. Okay, promoting protection of human rights, labor rights. That is a UNHRC, United Nations Human Rights Commission's job, not the IMF job. IMF is a multilateral financial institution. 37. The Human Development Index summarizes a great deal of social economic performance in a single composite index by combining what are the three main things of human development, three main dimensions of human development: health, actually the proper term is longevity, education, living standard. Number 5. Longevity, a healthy and a long life, education and living standard. Average mean years of schooling, then expected years of schooling, education we look for. Living standard, right? We look for the per capita GNI, right? 38. What is the facility on which GOSL has reached an agreement with the IMF, International Monetary Fund, to attain forex reserves and macroeconomic stability? Forex reserve stability and macroeconomic stability, extended fund facility number 2. Okay, extended fund facility number 2. Economic development refers to, as you guys have now gone through the Unit 11 virtual product and the notes as well. You know, growth and development are two different concepts. Development is a much broader, multifaceted, multidimensional concept which goes beyond income and output. Okay? So the correct answer would be number 5, desirable changes in income distribution, poverty, unemployment, especially according to the teachings of Professor Dudley C.S. Right? Meaning of development. Yeah. Number 41. Which one of the following is most likely to be an example of supply side economic policy? Supply side economic policy to improve our potential output, yes. Improve the efficiency of the economy, reduce the government's involvement in the economy, give more opportunity to the private sector. That is called supply side policies, supply promoting policies. So option number 3, conducting suitable tax reforms to make the system more business friendly, give more opportunity to the private sector, is encourage production. Again, if there's anything you want me to explain, you need to ask. Okay. 42. Which one of the following is not an obstacle to economic growth in developing countries? Not an obstacle for growth in a developing country. Not an obstacle for growth in a developing country. So, 4 things should be obstacles, 1 is not. Number 4, presence of multinational corporations. There are certain demerits and drawbacks of multinational corporations, but they definitely is one way we can bring investments into the country, we can create employment opportunities, we can get new technology, we can experience new management methods, right? So there are benefits that will help in our development process. 43. Which of the following factors cause decrease in dependency ratio? Okay. Basically, the dependency ratio is what is the percentage of the population, that is the child population and the elderly population, that has to be sustained by the working age population. But if the dependency ratios are to decrease, the base, that is the working age population, should increase. Answer number 2. Answer number 2. 44. According to the World Bank's country classification, as of 1st July 2024, low-income countries are those with annual per capita less than. Have I given answer 4? Just check. Should be answer 4. Yes or no? Answer 4? Yes, answer 4. Right, good. 1,145 US dollars. Okay, low income. The core objective of the multiple issuance of dollar-denominated international sovereign bonds. We have done that since 2007, right? And accumulated a major debt there also, more than 12 billion US dollars. So, what is the main objective? The main objective was to find the money we need, the counterpart from our side, the money we need for the infrastructure development projects and to finance our budget deficit. Answer number 5, or option number 5. Option number 5. 46. All of the following would result from an increase in interest rates, except which one? Which is not a result of an increase in interest rate. Government revenue tends to increase. Government revenue doesn't increase with interest rate. That will happen with tax rates. Okay, interest rates is a monetary instrument, monetary policy instrument that has not that is not a way government can generate revenue. It's not a fiscal policy instrument. 47. The international law global dire poverty line, right, estimated and presented by the World Bank as of October 2017 for low income countries was amended. Okay, it was first presented in 2017, then it was amended. The question is now how much is it? Should be answer 2. Okay, now it's $2.15. Earlier it was $1.90. Okay, even before that it was $1.25. After the pandemic, they raised it again. 48. When the Lorentz curve is moving towards the equal distribution line, the economy will experience less disparities in income distribution. The income distribution disparities are becoming better, lesser. Number 5. 49. All of the following are features of globalization except one. Which one is the exception? What is not a feature of globalization? Just because we have globalization, right, that doesn't mean the terms of trade of countries will improve. Terms of trade is depending on what is the price we get for our exports and what is the price we have to pay for our imports. Okay? It has an impact from the exchange rate, not with globalization. 50. All of the following would likely to restrict long-term economic growth, except which one? What is not a restriction towards long-term economic growth? Number 4. The more open our economy, it will benefit long-term economic growth, not restrict long-term economic growth. So that's the MCQ paper. Let me quickly take you through a roundup of the structured paper also, right? Then we are done here. Right. Hopefully you guys can see the structured paper on screen now. Right. So in question 1, some of these questions I am highlighting need a bit of, all questions need equal, all question needs attention, need a bit of extra attention. Okay. Right. So here we go. Question 1, land resources and natural capital. Entrepreneurship and human capital, always things you should be clear on. This is a good question, which is a bit timely actually with the education reforms. So be okay with that. Then it has not been tested in a long time, the economic performance What are the indicators? Right? So question one, two, part 1, part 2, and part 5. Question 2, standard questions. You guys need to be good with all of these. Question 3, part 2, I want you to think about it a bit. Question 3, part 2, okay? Question 3, part 2. Question 4, part 2, about fixed cost. This is very important. The functions of supernormal profits in a market economy. So question 4, part 2 and part 3. Diagram based questions, you guys know how to work on them now. Question 5, limitations have been asked, but always good to be thorough with them of national accounting. Part subsection B, question 6. Okay, hopefully you understood part 1 of the question. I'm asking about the 3 motives of demanding money and the determinants. 6 part 1. Yeah, this part 3 is good question. What happens to inflation rate during periods of recession, stagflation, and economic boom? Then the CCPI and CPI comparison, flexible inflation targeting framework, always important things. So question 6, part 1, part 3, part 4, part 5. Okay. Question 7, I feel the entire question is important. Okay, on unit 8. Okay, so be thorough with everything here. Question 7. Question 8. Part 3. Question 8. Part 3 on trading services. Okay, and part 5. Part 3 and part 5. Bit of extra focus emphasis is required. Question 8, part 3 and part 5. Question 9 is from unit 11. Question 10 is from unit 12. In question 12, these 2 parts can be tested in other units as well. So might as well have a bit of a understanding. Get it? Last 2 parts of question 10. Yeah, so with that, we are okay. So, right. Right. But Ibrahim, can you talk to me after the session? Yes, just be online. We'll talk about it. Okay. Unit 12 questions. If you're referring to MCQs, certain key things you have to know we are learning. But second paper, if you're planning to select them, then you need to really go deep and be very thorough with unit 11 and 12. Okay. Anyway, we'll talk about it once I've concluded the session. Right. So with that, we have completed this mock exam 6 discussion session. So continue with the work, and I'll see you guys again with the mock exam 7 discussion session. Okay. All the best.